You're the guy that I want to come to and get some perspective.
I appreciate that. Thank you.
Yeah. So, I mean, was this feels inevitable? Do you think it was sort of inevitable that we get to this $4 trillion level? And what do you think is responsible for the latest leg in Nvidia?
Yeah. Look, in the markets, nothing is truly inevitable. Maybe now that being said, look, AI is probably one of the largest technological inflections in our lifetime and probably in history, and they're right at ground zero creating it. And so if that is going to be as big as I think many and myself think it can be, why shouldn't they be benefiting from it? I mean, they should be presumably benefiting from it more than anybody else, and clearly they are. So in that sense, I would like to think that it could have got here, and it did, and I'd like to think that this is not the end as well.
Well, and one of the things that some investors have talked about is the valuation of Nvidia. Even as it has climbed and climbed, though, the PE has not gone crazy because the company keeps earning more money. At what point, would valuation look stretched? Are we anywhere close to that yet?
Well, versus its history, clearly not. I've seen it trade, as high as 60 times earnings. And, this has sort of been a controversy the whole time. I remember, before this started, it was expensive. It was actually more expensive than it is now. And just as the stock itself was running up, a lot of people used to make the point about valuation, but they were sort of conflating valuation with market cap. And I made the point time and time again, I may have even made it here, that to the extent that the stock price had gone up, the earnings had gone up even more, and the multiple had actually come down. And if you look among all the AI stocks, quote unquote, right now within semis, it's probably one of the cheaper ones now, as long as you believe that the numbers are achievable. At this point, they look pretty achievable. Yeah, the valuation looks pretty good to me.
And it's funny, Stacey, because we're talking a day after you caught my eye with the note that you came out with that said, U.S. semiconductors, time to awaken from tariff slumber.
Yes.
Is that the big stumbling block for Nvidia and its competitors?
Well, maybe less so. So tariffs in general, people, the whole sector, not just in semis, but everything kind of got whacked in April during Liberation Day. And with all the back and forth and pauses and everything, people have sort of, dismissed tariffs, I think, as a risk. They clearly must be, because the markets broadly are at record highs. And, Trump sent out some tariff letters a couple of days ago that were mostly consistent with the reciprocal rates that he talked about before. And it looks like those rates may come back on August 1st. And within semis in particular, we have the 232 investigation that's going on. And my assumption is that we actually will see tariffs specifically on semiconductors at some point, probably soon. And it is something that I do think investors have not really been looking at. So it's something that should be. Now, as far as that goes, the AI space actually may be a little bit more insulated. Number one, just because the demand, I think, is actually quite real. But in terms of the tariff structures themselves, most of the AI servers that are used in the U.S., it turns out they actually come in through Mexico. And there's another broader carve out with this stuff that comes through Mexico that's USMCA compliant, which these servers actually have no tariffs on them at all. So I think tariffs, nobody's completely insulated if it actually gets implemented. But I actually think the AI supply chain, in some sense, may be somewhat more relatively insulated than other areas of the space because of that Mexico avenue and some other things. Plus, like I said, I think the demand in general is off the charts. If costs go up, I think spending still.
The artificial intelligence, AI infrastructure boom is being led by Nvidia, but it is also the boom. Its CUDA software has contributed to the creation of a massive moat surrounding its business, and its graphics processing units, GPUs, have formed the foundation of AI data centers. Data center income has increased more than 9 times in the last 2 years, from $4.3 billion to $39.1 billion. That kind of growth is practically unheard of for a firm the size of Nvidia. Nvidia has achieved an incredible feat by surpassing the $4 trillion market capitalization milestone because to this momentum. Additionally, it accomplished this swiftly, going from $1 trillion to $4 trillion in less than a year. I don't think it's too far to forecast that the corporation will reach $5 trillion by the end of the year. The setup is still solid, and the gain from here is only around 25%. The price of Nvidia is still fair. According to this year's expert predictions, its forward price to earnings, PE ratio, has slipped up to 38 times, but its forward price earnings to growth, PEG ratio, is just slightly over 0.8, A peg below 1 indicates that a stock is cheap. The company currently trades at just 28.5 PE and less than 0.8 peg on next year's analyst consensus, and investors will soon begin to look to 2026 estimates when examining values. With a 25% gain in Nvidia's stock price, you would still be looking at a modest 35.5 times PE and 1 peg. Nvidia's CUDA software platform is its greatest asset. The original purpose of GPUs was to accelerate video game graphics rendering. Nvidia, however, recognized a greater possibility and created CUDA to enable developers to program its chips for different uses. Early AI development started when Nvidia strategically introduced CUDA into research labs and colleges, even though GPU utilization for other activities didn't take off right away. In the end, the long-term wager paid off handsomely. More tools were created for CUDA, as it became the platform on which developers learned how to program GPUs. Nvidia was able to maintain its lead because to this network effect, and last quarter, thanks in large part to CUDA, it took a 92% market share in GPUs. Despite improvements, AMD's ROCm software platform still lags far behind in terms of developer support, documentation, and ease of use. The demand for Nvidia's chips is still high, and its primary market is still AI training and inference. While cloud computing companies and other hyperscalers with massive data centers are racing to scale out their infrastructure, businesses are spending heavily to build out large language models. Meanwhile, the firm driving this expansion is Nvidia. By 2028, data center expenditures related to AI are expected to surpass $1 trillion, according to Nvidia CEO Jensen Huang. Although Nvidia won't receive all of it, the business is in a strong position to receive a sizable portion due to its dominance in GPUs. It also keeps coming up with new ideas quickly. With new architectures to be released year rather than every 2, its chip release cycle has accelerated. That ought to help it maintain its lead and stay ahead of competitors. Nvidia still has more options even if data center expansion slows down from here, which it will eventually. Its growth engine is not limited to data centers. The company's automobile division is expanding. Auto sales increased 72% to $567 million in the previous quarter. Although that is a small portion of its data center revenue, Nvidia anticipates that it will reach $5 billion this year. Robotics and smart cars are driving the auto industry's expansion. With its network of robotaxis powered by Nvidia technology, Alphabet's Waymo currently operates over 250,000 paid rides per week. And that's only the beginning. Nvidia's Drive platform is being used by Volvo, Toyota, and Mercedes to provide increased autonomy and driver assistance. In the meantime, Nvidia technology is being used by Hyundai and General Motors as part of their Smart Factory program. In 2022, Nvidia predicted that its auto business might generate $300 billion. That figure doesn't seem implausible considering the developments in autonomous driving. A jump to $5 trillion is very possible given that the stock has already reached a $4 trillion market valuation. Even with that strong 25% return from present levels, the stock would still be a good investment. Nvidia is a stock you want to own as long as spending on AI infrastructure keeps increasing. High-performance US AI chips will now need permits to be exported from Malaysia, indicating that the government is attempting to prevent the sensitive parts from being diverted to countries like China. Malaysia's Commerce and Industry Ministry announced Monday that, with immediate effect, people and businesses must provide Kuala Lumpur at least 30 days' notice before exporting or shipping such devices. If they know or have reasonable grounds to believe the products will be misused or used for prohibited purposes, they are required to notify the agency. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video. According to the government, Malaysia would not put up with the abuse of its jurisdiction for illegal business. Washington, which has essentially prohibited the sale of cutting-edge AI chips to China since 2022, has put growing pressure on Kuala Lumpur to stop the alleged transit of those parts to China through middlemen in Malaysia. In March, Malaysian officials announced that they will strengthen laws governing the nation's rapidly growing data center sector, which depends on processors made by companies like Nvidia Corp. According to the ministry's statement, the new permit requirements are intended to fill legal gaps, while Malaysia conducts additional research into the possibility of adding AI chips to a national list of goods protected by the Strategic Trade Act. Questions regarding whether Washington pushed for the controls were not immediately answered by the ministry. A court case in neighboring Singapore also centers on semiconductor sales to Malaysia. Prosecutors accuse 3 men of misleading customers about the final destination of AI servers that were shipped from the island nation to Malaysia, possibly containing cutting-edge Nvidia chips. In March, Malaysia declared that it will keep an eye out for potential fraud even though its inquiry into the issue had not found any proof of such shipments. According to Singapore's investigation, Nvidia has not been charged with any misconduct. With several facilities for creating and implementing AI models, Malaysia plays a significant role in the supply chain for AI. The country, which saw a spike in imports of essential components this year, especially in April, the month before the US was supposed to start requiring licenses to ship AI chips to Malaysia and many other countries, is seeing a massive expansion of data center footprints by American companies, such as Oracle Corp. In an attempt to combat suspected semiconductor smuggling into China, officials have since drafted a separate regulation that would require such approvals for AI chip shipments to Malaysia and Thailand specifically, although President Donald Trump's administration decided not to proceed with that policy in May, according to Bloomberg. The final version of that rule is still pending. In broad statements that did not specifically mention any nation, Nvidia CEO Jensen Huang stated that there is no evidence of AI chip diversion. Malaysia's Commerce Ministry responded to earlier Bloomberg questions over the possible U.S. limits by saying that it welcomed communication with the U.S. and other countries to clear up any misunderstandings, but cautioned that unilateral restrictions might impede innovation and disrupt lawful trade. All issues pertaining to bilateral commerce between Malaysia and the United States are interconnected, with each playing a distinct role in the ongoing trade negotiations. The ministry, which, like many others in Asia, is now negotiating a trade agreement with U.S. officials, stated. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.